Good morning, folks. My name is Nate Cook, and I'd like to welcome you to our webinar. We're going to get started in about 1 minute. Okay, folks, I think we're ready to get started. My name is Nate Cook, and on behalf of the Center for Regional Economic Advancement at Cornell University, I'd like to welcome you to our webinar, Supporting Startups Through COVID-19. Let's start by turning to the agenda. In a moment, I'll introduce my colleagues and panelists who are joining me today. We're going to be discussing the Small Business Administration Federal Disaster Loans for businesses. We'll also review local services for assistance in applying for these loans. We'll have a discussion on unemployment insurance and loan forbearance trends. And then we'll have a discussion on some of the various resources that are available for startups and other business owners in the area. And we'll also touch on some of the pending legislation that's emerging from the Senate and now is going to the House. So with that, let's do introductions. So my name's Nate Cook, and I teach at the Johnson School and the College of Engineering at Cornell University. And I also serve as an entrepreneur in residence at Cornell University. And now I'd like to introduce Ken Rother.
Hey everybody, I'm Ken Rother. I'm the director of REV, and also, which is part of CREA, the Center for Regional Economic Advancement. I teach entrepreneurship up the hill at the MBA school. I'm involved in a bunch of startup activities and sit on a couple of investment committees. And I'll just take this 2 seconds to sort of give the status of REV. REV is card key access only for members, and in conforming with the essential businesses should even be using their place of business. And so unless you fall into the category of an essential business, you shouldn't be accessing REV at all.
And Judy?
Great. Hi, my name is Judy McKinney-Cherry. Welcome. I am the co-chair for the Regional Economic Development Council, which is one of the governor's 10 councils around the state that is responsible for ensuring economic development. Grants and programs are shared, throughout our region. It's an 8-county region. It runs from Delaware County to Steuben County, includes Tompkins as well. And I also have the honor of being the CEO for the IDA here in Schuyler County, and also the Schuyler County Partnership for Economic Development. And I also sit on as a board of trustee for the Corning Community College. And it's a pleasure to be here. Thanks, Nate.
Thanks, Judy. Lindsay?
Hi, I'm Lindsay Wolf. I'm a business advisor for the Small Business Development Center based out of Binghamton University. We offer free and confidential business advice. I'm also the Tompkins County advisor. Normally I have an office in the Commons, but right now I'm working remotely, as are the other advisors.
Thanks for joining us, Lindsay. Bill?
Bill Waring, the CEO of Areti Construction and a member company with REV.
Thanks, Bill. Kellyann?
Good morning. I'm Kellyann O'Mara. I'm Vice President, Commercial Branch Manager for M&T Bank. I'm located at the Chiphammer branch. Currently, many banks have their lobbies closed to general traffic, but we are taking appointment-only clients so that we can, make sure we're keeping a safe distance. We are doing most of our banking through our drive-through ATM and mobile app, and I believe most of the other banks are doing the same. And glad to be here. Thank you.
Thanks, Kellyann. Jonathan Greene?
Hi, John Greene. I am a partner with New York Ventures. This is a investment fund that's run by Empire State Development. It's a $50 million fund, and we invest in startups across New York State. I focus on upstate New York. My background, though, is in startup operations, and I've been involved in a number of venture-backed startups.
Thanks for joining us, John. And lastly, my colleague, Brad.
Hi, everybody. I'm Brad Treat. I'm the lead for the Southern Tier Startup Alliance. This is an organization funded by the state to cover an 8-county region that's called the Southern Tier. So think of that as from Ithaca to Watkins Glen down to Corning, Elmira, Binghamton, even Norwich. So we have 8 counties. There are 7 incubators throughout those counties, and there are 150 plus companies in those incubators. Prior to doing this, my job title for the better part of 15 years was CEO, and having raised money in 2 economic downturns, I think I might be able to provide some insights here as well. Thanks.
Thanks for joining us, Brad. So let's just turn to the Disaster Loan Assistance Program from the SBA. The SBA provides lower interest long-term loans for physical and economic damage caused by a declared disaster. And the federal COVID-19 disaster declarations makes economic injury disaster loans available due to the coronavirus outbreak. And these loans are available to small businesses, small agricultural cooperatives, businesses and nonprofits of a variety of different sorts. So let's take a look at the loan terms as we know them today. Kellyann? You're on mute, Kellyann.
Sorry about that. Eligible entities may qualify for loans up to $2 million. It is a fixed rate of 3.75 for for-profit businesses and 2.75 for not-for-profit. The maturity can go up to 30 years. For loans less than $25,000, no collateral. For loans above $25,000, available collateral will be taken. And this is regardless of any previous liens that you have on that property. Understand, though, that all available collateral, including your residential property, would be in play with those. They're saying decisions made between 8 to 21 days and funds received, 5 days after signing. Now, we did get word that they are expecting up to 500,000 applications with limited resource. So it could be quick or it could be longer. They're really asking that, you be patient with the whole process. Also, something that did come out to most of the banks is, for example, M&T is a preferred lender. There are programs available, that we can use today that might get people money sooner. But I think the point that they want us to make to people is if you do apply for these loans, you do apply through the SBA and your banker is out of the process. So you can't call us and say, what's the status? Where's it at? Can you help rush it through? We are completely removed. It's between you and the SBA. Also, we got word of just to remind everybody that your bankers, are your trusted advisors. So, talk to your banker because we are here to help. And if this makes sense for you, we'll definitely help you recommend and give you the resources to apply.
Thanks, Kellyann. Let's look at the eligibility requirements.
So you must have a significant physical presence in New York State. And you do have to show the ability to repay the loan. So, if your business has been struggling for years, you will not qualify for this disaster loan. So understand that. Credit history has to be acceptable to the SBA, which usually is more lenient than the bank standards. And of course, you must be eligible, qualified small business.
And I just want to add, because I've had people ask me, what does a significant physical presence mean in New York State? And, the easiest way to explain that is that PO boxes and those types of arrangements, really don't meet the standard. You really have to be here and be operated in New York State to be able to apply.
Nate, I do have a question I want to bring up from the group. Somebody asked, I was advised to hold off applying because we would not be eligible for what comes from the stimulus package. Is this correct?
So here's my take on that, Ken, which is that the stimulus package as it stands right now has passed the Senate, and we'll talk about this a little later in the webinar. But because it's still pending in the House, we don't know exactly what's going to happen. The language does talk about some, take this loan or take that loan, but you can't do both. So I think, that certainly is something to be in play. And, the reality is that we're living on a day-to-day basis. So, there could be changes on, tomorrow in terms of, where we are today. And I encourage any other panelists to jump in with any other comments they have on that subject.
I just wanted to answer a question quick about personal guarantee. Right now, it does require personal guarantee. If the stimulus package goes through, then that would change and there would be no personal guarantee up to $200,000.
So Lindsay, why don't we talk about the SBA disaster loan application process?
Okay, so right now you're applying online for the disaster loan. The SBDC can assist you through the process. I'm not sure if any other agencies are doing that as well. We can actually Zoom screen share so we can make sure that you're filling everything out correctly. There's no cost to apply, no cost to take the loan, and you're not obligated to take the loan. So we do encourage people to go through the process, but you don't necessarily need to take it if something better has come along.
And what are the items that are needed with an application?
So the 3 most recent tax returns, if you have not filed the 2019 tax returns, that's okay. You have to have a copy of your 2019 P&L instead. The schedule of liabilities, you have to show the financials that actually show that you have had a revenue loss based on the COVID-19. And then the application form 55C, your personal financial statement, and the 4506T, which can all be found online as well. The SBDC can also help you with the document collection, so we can send you a link to all of those forms as well.
So I have a couple questions that are a couple common questions. Pre-revenue companies, would they not qualify therefore because they couldn't show an ability to repay?
Well, we're still waiting on answers for that. So we'd have to actually talk to the SBA directly about that.
Okay.
John, would you like to talk about how funds are supposed to be used for these loans?
Sure. So essentially, these loans can be used as working capital. So you can use them to pay off a fixed debt. You are encouraged to pay payroll, to pay your accounts payables and other bills that could have been paid had the disaster not occurred. The running guidance is that loans are not intended to replace lost sales or profits or to expand your business in any way, shape, or form. But the reality is you would use revenue to pay off your bills to a certain extent. So I wouldn't get too hung up on that. We have at Empire State Development, we've been getting a lot of questions regarding, my restaurant shut down and I'm missing revenue, for the last X number of weeks. Will there any be programs for replacement? And loss of revenue is definitely not necessarily something that the state, likely the feds will be into. But as I said, the working capital, the loans, working capital, and there may be other grants to essentially pay off some of these key things for operating, key expenses for operating a business are in fact part of the mix.
And I think that comment on the replacing lost sales and profits, it really goes to the heart of the question from the start of about pre-revenue. Although one of the things that we'll be keeping a close eye on in the pending legislation are additional loan funds that any business owners can apply for. So that'll be something to keep an eye on. Ken, did you have another question you wanted to bring?
I think there was any information on how any of this applies to nonprofits.
So I'll take a stab at that, which is that nonprofits, just like other business organizations, are eligible to apply for these disaster loans. And so it's not limited to small business corporations in terms of eligibility requirements.
Same ability to repay though, based on future revenues, gate revenues, or what have you?
That's my understanding, Ken.
Okay, thanks.
One clarification that I did receive is that the 501c3s are eligible, the 501c6s are not eligible.
That makes sense. And I guess I would encourage, folks that are putting in applications, and this really goes for all SBA applications and loan applications in general, which is that incomplete information is the biggest reason for delays. So make sure that you really complete everything. And if you need assistance, folks like Lindsay are here to assist those and directly applying to the SBA. Now, if you're denied, there will be a period of 6 months to provide additional information to complete an app, and there's always a possibility that a reconsideration can be made. If a disaster loan is taken and more funds are needed, businesses can apply for increases. And I've even seen that in people that have loans right now, even with traditional banks. There are bankers that are actually lending more money even in a credit tight time period. I think it was mentioned earlier about the personal guarantees, but just to reiterate, as a general rule, SBA loans come with personal guarantees. And although we haven't seen specific guidance on this, it's basically assumed that anybody that owns 20% or more of the equity in an entity would be obligated to personally guarantee those loans. If there aren't any more questions on the SBA process, we're going to go ahead and turn to unemployment insurance. And this is a topic that I've certainly been talking to a lot of folks about. And one of the reasons that I wanted Bill to join us today is that as an entrepreneur, he's really sitting in the hot seat of thinking about these issues and how it relates to his company. And as we always say, it's great for entrepreneurs to talk to other entrepreneurs to see how they're coping with these issues. So, Bill, I'm going to turn it over to you, and you can sort of walk through some of the eligibility requirements here.
Thanks, Nate. I'm going to talk purely from my experience in doing the research and navigating this as an entrepreneur, not from a recommendation perspective or from a legal perspective. So my experience with this has been that it is a complicated process, but it informs a lot of the decisions we needed to make as a company to think about what's best for both the company and our employees. So the first thing is to think about the eligibility for filing, and employees have to have worked or earned income over the last 2 quarters of the previous 5, which is their base period. So if you have employees right now who have just started with you or who have a lax in employment, they're going to look for a previous history of consecutive quarters of employment to base that eligibility and filing status on. There's a great how-to on the labor Department of Labor website. I would say that is more of the authoritative location for this information, but the website itself has been overwhelmed with a number of requests, so it's a bit slow to respond for any individual questions that you have as an employer. Currently, the New York State is waiving the 7-day waiting period for unemployment for anyone who is indicating that their unemployment is due to the COVID shutdown. So this is an important designation during the application process to say that your either your downsizing or layoffs or temporary layoffs are due to the COVID infections and not because of some other business-related problem. So there is a designation in the application process to say this is due to the COVID issue.
Why don't you walk me through the claims process, Bill?
Sure. So they've decided to split up the folks who are applying during the week to make sure that the volume can be handled. I'm doing 9 a.m. Web conferences with all of my previous employees to help them walk them through this every day because it is very complicated. And they're all reporting challenges to their own applications. So the first challenge is the volume. There is a designation of which days you're allowed to apply on the first 3 days of the week, given the first letter of your last name. And then Thursday, Friday, and Saturday are kind of catch-up days for anybody who missed those. If you are filing a claim during that week, anytime during that week, it is effective as of Monday of that week. So if you file on a Saturday, it is effective as of the previous Monday. So it's more important to spread out these claim applications during the week than it is to try and get them all in at once. I did see, I don't know if anybody saw the article come out today, that 3.3 million people have applied for unemployment as of the week of the 21st, which is a magnitude of about 6 times the previous high. So the volume right now is pretty incredible, and the state is doing its best to respond to that.
So, given sort of where we are, I wanted to sort of note the difference between employers and employees, and from an eligibility standpoint. And a lot of people have been asking me, you know, can owners of companies, can corporate officers apply for these loans? And it's a bit of a murky question, but the guidance suggests that there's not really applicability. Do you want to comment on that, Bill?
Sure. As of up until today, the guidance we've gotten from the Department of Labor has been that the assumption is that officers of a corporation have to remain employed in order to manage the operations even during shutdowns. So therefore, they don't meet the unemployed qualifications, even though there's no revenue coming in. So purely from a box checking perspective, operators can't typically check that box because they have to continually be operating the business, even if it's not generating revenue. So I think that's the first kind of watershed decision point that they're coming in with. But it did sound like, and maybe someone else can talk to this, that the new legislation that's coming through could potentially change that eligibility criteria for owner operators and make them eligible for unemployment. I don't know the details of that. I just started reading that this morning, so maybe that's probably somebody else's expertise that can talk on that.
I would chime in. Oh,
go ahead, Lindsay.
Sorry, Ken. I just want to chime in that if the stimulus package is passed, it'll be a temporary pandemic unemployment assistance that will include self-employed, independent contractors, and those with limited work history.
So we just had, someone asked about startups only founder. I think we just answered that. Can you please touch on the NY State Shared Work Unemployment Program?
Does anybody want to chime in? I can take it if not.
Go ahead, Lindsay.
Yeah, the shared work program is a really great option. It allows you to have your employees work part-time and then collect partial unemployment benefits. They have to have been working at least 40 hours to qualify ahead of time.
Okay. There's another question, and for M&T. Are there fees for these SBA loans through M&T?
So I just want to clarify one thing, and then I'll let Kellyann jump in, which is that these disaster loans, the application process is directly through the SBA, and that's different than a lot of people who are familiar with SBA loans from banks, whether they be 7As or 504s. And so it's really not, your bankers can absolutely assist you in the process, but the application process doesn't go to a traditional commercial bank. It goes directly to the SBA. Kellyann, did you want to add something to that?
Yes. So right now, what we are looking for clarification, because there are other SBA programs that your bank can administer that you can apply for outside of this disaster relief. And there's many, many different programs. We're a preferred lender, so we do have an SBA representative, and we're getting clarification as to, whether they are waiving all of the fees that are associated with those loans. We don't have that information just yet. Also, with this new CARES legislation that's being passed, many of those loans and those provisions will require that you do apply with your lender. So we're waiting to still get, specific direction and clarification for those loans that are going to be available.
Okay. I'm guessing this is going to be, we have to see, but regarding the SBA loans, do you know if there's a penalty if you pay off the loan early?
There's no penalty to pay off, excuse me, the loans early on the SBA. So if you are able to do that, you can.
Will disability leave or paid family leave be set to higher levels?
I don't think we know that today, because part of that is dependent on what's in the pending legislation that's going before the House.
Okay. One more about the loans. Regarding the SBA loan, if there are significant assets in a retirement plan, IRA, or equity in a home in the personal asset section of the SBA application, would that disqualify an applicant?
No. One of the things to clarify, for any type of loan, we're never able to take collateral or a lien against your retirement funds. So those will never be pledged as an asset for any type of loan with that. But it is looked at as an alternative, repayment source. So it's looked more on the qualification piece of it, that you have those assets versus actually being pledged as collateral.
Okay, I think the question was about qualification. Okay.
Yeah.
One last, and then I'll go back to the program. The shared work program, is that only applicable to seasonal type businesses? We've been told this.
As far as I know, it's not applicable to seasonal businesses. I mean, it's applicable to anybody.
Okay, well, that's great. Well, getting back to this question of unemployment insurance, I wanted to talk about what the impact on employers are. So, Bill, would you like to take us through short-term impacts?
Sure. I think this was probably one of the biggest considerations in the decision we made, was to think about what our liability is moving forward if we do a universal layoff. And so the short-term impact really comes down to your existing unemployment account at the state. All employers are paying into that using their weekly or quarterly payment systems. And that amount builds an account up, hopefully positively, into your operating future. As soon as you start filing claims back against that account, you begin to debit that down over time. In the case of doing universal layoffs, it's likely that there is an initial cost to that account of about 7 times the claimant's weekly benefits. So as your employees, or as any of the employees go to file claims, they're going to be given a weekly earnings amount up to $504. Now that's changing with the new legislation that's potentially coming through. But that amount immediately debits your state account as the employer up to 7 times that weekly amount for each employee. So if you're like us, we are paying into that about 4%, I believe, on every payroll. So you can see that we would pretty quickly reduce that charge account down to 0 and go negative given any short or medium term layoffs. So the short term is there's going to be an immediate debit of your charge account at the state. And if you're doing universal, it's going to probably draw that down past 0.
So one of the concerns, Bill, is that these unemployment insurance accounts get audited. And so what happens when the account goes negative?
Sure. I think this was a kind of a long way around to this answer, but from reading the guidance on Section 581, it seems like the way we're interpreting this to be is that there will not be an immediate requirement to bring that account positive. Instead, there will be an adjustment to the base rate that you're paying in the future for up to 3 years. That's what they call experience rating. Basically, if at the end of the year, we've gone through a multi-month layoff and drawn down that charge account well into the negative, your employees, all of our employees will continue to receive their benefits. That doesn't change. And the employer will still be allowed to remain in good standing with the state. What will change is the rate at which each payroll is debited thereafter for 3 years. So in their guidance, they go up to as high as 8.9% of payroll for 3 years. So the result is effectively that, for the time being, you can keep people receiving dollars on unemployment with the intent to bring them back. And at the end of the year, you don't incur a large one-time liability to pay all that back, but it becomes prorated over the following 3 years.
Okay, thanks, Bill. Turning to
I got a couple more questions, if I can. One of them relates. So for folks that get laid off and go on UI, is health insurance that was previously provided by the company on the healthcare.gov exchanges the way to go?
So if they were previously employed and they had healthcare benefits, they would qualify for COBRA. but they wouldn't continue to get the same health insurance that were provided by the employer once they're no longer employed. I think is the short answer. If anybody else wants to add additional comments on that.
I'll chime in and just say, I think as an employer, we made the decision to extend benefits to those temporarily laid off until the end of May. And we made that decision purely because of that question, because we understand that it's not just about compensation during this time, but also about security. And so we as employers made the decision to extend those. And there is leeway within the law to allow employers to offer the extension of those benefits even during layoffs. So I don't know if the employer decides not to do that, what the best decision there is moving forward. But from an employer perspective, with the intent of bringing everybody back, our initiative was to make sure that folks have their insurance during this time.
Yeah, I've got some experience with that as well, Nate. What I will say is, if families have kids and they have in fact lost their employer health insurance, New York State has a really excellent program for kids. So the kids would go on that program, I think, below the age of 23, I think, 22 maybe. It's actually very reasonable and very comprehensive. It's called the CHIPS program, I believe. Or not, maybe it's not the CHIPS program. I don't know, maybe someone else knows the name of it, but it's a really solid program just for kids. If you do have to go on COBRA, I will say it's worth maybe checking out the exchange and looking to see if you can find something that is less expensive. Because I know from my own experience recently, the exchange was certainly much, much cheaper than what my COBRA was going to look like. Not necessarily as comprehensive, but pretty good.
So thanks, folks. Turning to the next category, let's talk about sort of forbearance trends, right? I think we've all heard comments about extensions in residential mortgages and commercial loans. And, you know, within Tompkins County, there's been a petition that's been circulated about a suspension of rents. And the thing that I wanted to talk about here is the importance of working with the people that are your lenders and having those candid conversations up front. Oftentimes when times are tough, people are reluctant to start difficult financial discussions, but really, you know, more than ever, this is the time to bring in the lenders and have a talk about, you know, what the future holds. So Kellyann, would you like to comment on that? And what are you seeing at M&T Bank right now in terms of commercial loans and forbearance trends?
Absolutely. So currently, you know, and I believe every bank has developed a program. Currently at M&T, what we're doing for our business clients is we are providing 3-month deferments of payments. They could be principal and interest, or it could just be the principal, and they could continue to pay the interest within those 3 months. And what is happening is we are asking our clients, my clients, to send me an email asking for that, explaining the reasons why they need it, how it's affected their businesses. And then what I'm doing is I'm submitting those through. Now, I would level set that, you know, there are many small businesses in the same situation, you know, that you are. And many of our people at our home office are working remotely. So we've seen a 2% increase in our volume, not only for lending requests, but also for these, you know, deferments. So I would just let, you know, everyone know just to be patient with the process. So I had a client who sent me one great justification. I submitted it. The next day, have you heard yet? And the day after that, have you heard yet? And so I had to say, it's in a queue and we are processing those as quickly as we can. But also too, with this CARES legislation that's coming through, it's really going to be very important that you are talking with your banker about what is the best course of action for your business, because there's a lot of moving parts. We've got the disaster relief loan that you apply with the SBA. A lot of the CARES legislation and programs you're applying with your lender. So it's just going to be really important that we find, the right solution. That should be the focus. Definitely be patient with the process, be careful, but also remember sometimes a program just based on rate isn't maybe the best program for you. So the right solution should be the focus as you go forward. There are also on the personal side, I know that we are currently offering 2.99% loans, up to $5,000, 1 to 3 year repayment, going out almost 60 days before your first payment is due, just to help people with their living expenses. And I know other financial institutions are coming out with similar programs for their clients.
Yeah, this is Judy. That's what we're seeing as well, as most of our financial institutions have done very, very similar programs where they are offering up to 3 months. In our case, we're actually doing 4 months. We have a regional economic development organization, REDAC, that does loans. They're actually doing 6 months. So of, abating both the interest and principal. So we're seeing lots of different programs like that. And I think we're seeing that from my conversations with my counterparts across the region. We're seeing this across the whole region. So I think you're going to see the economic development organizations that are doing loans, as well as the any of the IDAs that have LDCs that are doing loans are also have already put that into place, that they are providing this assistance.
So Kellyann and Judy, one of the questions that has come up is, after 3 months, how does the deferment work? When do you catch up, or is the loan extended? How is M&T handling this issue, Kellyann?
Yeah, so what will happen is the principal portion just gets kind of added on to the end of the loan. The interest is accruing and will be billed in that 4th month. But currently, right now, we are also looking at a program that would extend that out or allow it to be paid over, several months. Our goal is to just try to keep the business lending piece of it still in line so that they don't get too far behind. But we are also prepared that at the end of those 3 months, if we're not, through this crisis enough where businesses are back in functioning, that we'll be extending that even more.
And Judy, are you amortizing the cost over a period of time, or are you extending the loan for an additional 3-month period?
We're extending it.
At the
We're extending, and we're also giving a forgiveness on the interest, because that's what, we're not a bank. We're really sort of a lender of last resort. One of the things that we are doing, just so you know, is we are working right now with, and in fact, we have a call on Monday to see if we can, at the regional level, sort of pull some funds together, and then John will appreciate this, John Greene will appreciate this, and then go to the state and say, look, we've got this pool for bridge loans for those that they either can't wait or they don't qualify for some of the federal programs, and they have promising businesses, that were active. How do we go to the state and then say, look, let's use some of the money out of the URI to match some of this? So again, that's not done. That's the conversation we're having on Monday. Yeah.
And
so I think that, oh, go ahead.
I was going to say, I know you're in contact with a lot of your fellow colleagues at other IDAs. Is it your sense that the majority of IDAs across the state are doing similar things?
I don't want to speak for all the IDAs across the state, but I can tell you that those here in the southern tier are all operating under that same sort of process. We're all sort of doing the best we can to make this as, for our businesses to be successful and to come out of this thing as quickly as possible. So I would, if I were, again, just sort of giving you my 60,000 foot view, I would say that all the IDAs, if they've got LDCs that are doing loans, they probably have already notified all of their clients. I do know some IDAs that have reached out to anyone who has a pilot, so they're receiving some financial assistance already through the form of tax benefits. I know that most IDAs have already reached out to all of their pilot holders to ask them how they're doing.
So shifting from your role at Scoped to your role as co-chair of the REDC, what is the RED perspective on this, and what are REDC lenders hearing from New York State about statewide programs and things that may be available to startups?
Right. So the state has been really, they've been very proactive, and they have kept the line of communication open. And I'm not saying that because I'm the co-chair, I'm saying that because they really have. We're getting updates regularly, daily, multiple daily. In fact, that's, part of the fire hose is just sort of turned on. So the Lieutenant Governor did host a meeting with the regional councils yesterday, and sort of shared, a message of, one, let's get through this, let's get stronger, let's get resilient, let's look forward, let's not forget those things that are really underpinning of our economy that we were handling or dealing with before this human health crisis occurred, which is, we still have a workforce problem, we still have a childcare problem, we still have the need to keep our businesses growing, and a need to create an opportunity for new businesses to start. So, the messaging, as I interpreted it, was one of, yes, let's get through this, let's get our recovery, what we have to do to recover quickly, and let's get moving forward. So I don't know if that answers your question, but the state has been very good that way. I think at this point, because the regions do operate differently, and that they have different, they have different geographies. Some regions, for example, Finger Lakes, they're doing a pretty interesting thing. I just learned this morning, where they're literally putting together people looking for work with essential businesses that are looking for workers. So they're actually taking the bull by the horns and going forward with that. We haven't had that conversation yet in the Southern Tier. That's a conversation we will have on Monday, when we pull all of the IDAs together and have that conversation about what is it that we need to do collectively to speak with one voice.
So on that note, as we look to sort of working collectively together and sort of pooling resources, I wanted to take a look at one of the resources that CREA has pulled together, where we're looking at the various different resources that are out there. Brad, would you like to take us through some of these? Well, we may have lost
Nope.
Brad for a second.
There he is. Brad, I think you're on mute. I'll start. Brad, you can jump in when you're ready. So we've pulled together a fair number of resources, sort of some of it from governmental departments. We've tried to sort of segment it out. Some of it is very local, some of it's regional, some of it's state, some of it's at the federal level, sort of categorizing it by different things, funding, operations. So this is going to be a page that changes a lot. It's sort of, when you'll see it's time-stamped, because we're literally adding stuff as we see it come in. For instance, we saw something this morning come in for one of the accelerator programs. It has a COVID-specific grant opportunity out there. So as we see things that are useful, we'll update this page. As much as possible, this will probably be links to other people's information, so they're keeping their information up to date. We'll try not to duplicate information here and the risk of it going stale. But you should keep coming back to this on a fairly regular basis, because we're going to update this as we get more resources. And lots of other organizations are putting out pages like this. I saw Launch New York has something. I've seen a number of other organizations have put out pages like this. And the reality is there might be some conflicting information, because information will go stale very, very quickly as the rules change or get solidified. But we pretty good comprehensive list as we understand it right now.
Thanks, Ken. And in terms of, as we look to those state resources, Judy and John, can you give us a sense as to current trends and anything that might be happening at the CFA level or Empire State Development Funds that would be going out to businesses in the region?
So I certainly don't want to step out in front of ESD, so John can do that. But what I will tell you is that, we expect from a CFA perspective, we are expecting some guidance on what's going to happen this year over in the next 2 weeks. We will get the guidance. Typically what happens at the regional council level is that the co-chairs are brought together, usually in the 1st of April, end of March, and we're sort of given the guidance of what the priorities are for that particular grant, season. I'm using that term probably loosely. Just in the conversations that I have had over since January until as recently as yesterday, it's just sort of reading the tea leaves, and I want to be really clear, it's just Judy Cherry reading the tea leaves. I certainly am expecting that there will be some changes in the process this year, whether that's a timing change or whether that's some additional sort of priorities. I have 100% faith that we've got some of the best minds right now in the state circling around the governor and giving some pretty good guidance on what we need. So I would, as reading the tea leaves, I would do 2 things. I would still continue to, if you're working on CFAs for this year, and you're in the southern tier, I would still consider working on those exactly the way you have, and just maybe with an eye towards resiliency and business continuance. And that's one thing I would do. And then the second thing is just, watch for when the guidance comes out, because I think you're going to see some additional, again, reading the tea leaves, you'll see the same kind of programs we've had in the past, and then you'll see some additional ones that are more short-term or resiliency focused. And that's just reading tea leaves.
I appreciate that, Judy. John, do you want to make a comment on some of the various resources that Empire State Development is utilizing to sort of help businesses in the area?
Yeah, so good news, it's sort of a good news, bad news scenario here. So I'll start with the good news. The good news is that Eric Gertler, who runs Empire State Development, and my team and everyone that kind of reports up to our boss Pravina Raghavan, is everyone's well aware of the needs of the businesses in the state, and there's some great ideas that are flowing in. There's a lot of really good ideas that are kind of kicking around, everything from $10,000 grants that are just not going to get repaid, just to provide some immediate assistance. And that could be to any functioning business on up to, other types of more specific grants. So there's a lot of discussion happening, and that's sort of the good news. And I agree with Judy. I think things are going to change. They're going to change rapidly. And programs will evolve. So stay informed. Certainly, just being a part of this organization and checking your email and sharing information and networking are really good ways to kind of find about the new programs. Certainly, ESD has their own announcements. I think you can sign up on Empire State Development's website. So that's a great way to do it. The bad news is right now, the governor and everyone that works with the governor are focused on this public health side of the crisis. So finding our teams internally at ESD, for example, are trying to find ventilators. So, you know, it's a bigger challenge than one would expect. And you would think with all these people, it should be easier, but it's not. And so it's not that people aren't trying to figure out how to do this. There are lots of people, for example, reading the bill that is going through, going to the House right now and reviewing and trying to understand, you know, how that's going to go. I know my boss was spend, you know, basically 24 hours doing that. And the goal here is when the money hits, ESD wants to be in a position to be able to deploy very fast and very quickly. And so that will kind of trickle down to the regional economic development councils, and there'll be a lot of work to be done. The other thing we're trying to figure out how to do is create a better sense of customer service. Right now, we're responding via email to inbound requests, and my hope is that we'll change that to a more sophisticated system, but it's all in process. So, you know, if I hate to say it, but, you know, be patient, but be vigilant about, you know, programs that may come out, because, you know, one of the things that keeps coming up is, for example, with the SBA loans, people will say, well, I don't think I'll qualify. I don't think, you know, I don't have this, I don't have that. You know, it can't hurt to apply. I mean, really, at the end of the day, if you're a business and you can find some collateral, if you need it, it's worth it. And there are tons of resources to be able to help you do that, because on the off chance that you do qualify, it may be a good way to get some initial resources, and with the hope that grants and other mechanisms will be available through specifically ESD or the regional councils. They come online hopefully sooner than later.
And as we talk about additional resources, we definitely don't want to miss the fact that there's legislation that passed the Senate last night, referred to as the $2 trillion in virus relief. And now the bill has transitioned to the House of Representatives. And it's expected that the House could vote as early as Friday on this action. $2 trillion is certainly larger than any stimulus that I can recall of sort of modern memory. And just from a perspective, you know, 9% of GDP is larger than the three packages from 2000 through 2007 through 2009. I think a lot of people have heard about the fact that there will be money going to many Americans, $1,200 to for each person. You know, restrictions apply, and $500 per child. And there's this $500 billion that's going to Treasury to make loans and loan guarantees. And, you know, I think the key, though, is that this relief package, you know, is all about limiting the coronavirus damage, not really restoring the economy. There's going to be no way to really make right what has happened over, you know, the last month, I guess. And as I reflected on sort of all of the various programs that are out there, and sort of looking at how this $2 trillion of money is going to get spent, there was a great Wall Street Journal article that came out this morning, and I put 226, so I'll have to fix that. I meant 326, but it lists all the various categories of by amounts of money in specific industries. And, you know, what it made me think about, and this is, I guess, hopefully a positive note to leave everybody on in the mid of a crisis when it's hard to think about positive things in a pandemic, which is, with all of this money going to all of these various industries, there's opportunities that will emerge, you know, from this very difficult time. And when I mean opportunities, please understand that I'm not referring to sort of the mindset of, you know, hoarding masks and selling them in a price gouging market, but rather more from an entrepreneur standpoint, thinking about what are the problems that are in these particular industries, whether it be healthcare or otherwise, and if there are significant, huge problems, what are the solutions that are really going to take us from where we are today to where we need to get sort of the economy back going. I'm excited about the prospect of sort of what the future holds in a difficult time. And with that, I just like to turn to my panelists and we'd like to answer any last questions that might be coming in from the folks that are on this webinar.
So there are a bunch. Do you want to just take them, Nate, or you want me to read them out?
Go ahead, Ken.
Okay, so just some clarification ones first. Reshared work program to clarify: employer pays part-time wages for hours employees are working, and state pays the remaining hours that employees are not working? Question.
Yeah, there's a formula and there's a frequently asked question page on the shared work site that's really helpful if you want to figure out what's best for your company.
Can I wanted to add some clarity there too. All of the benefits that are claimed under any of the unemployment programs are charged back to the employer's experience rate account. So the notion that the state pays for any of that really comes from that the employer pays for that out of their experience account. Only the state only picks up the bill if that goes negative beyond a certain formula amount. But it's really important to note there that the employer is the one that carries the burden of that, the unemployment claims.
Okay, quickly, any sense of the timeline when an R&D grant funding process will be set up? Should we be thinking very soon, days, weeks, short term, 1 to 3 months, or longer than that?
Yeah, it's really difficult to say. You know, I think there are those of us who would like to do it now, but we just don't have a mandate yet. So just stay tuned. If I had to kind of use Judy's term of reading the tea leaves, the John Greene tea leaves, I would say, you know, a month, maybe sooner.
Okay. There's actually a good question here. How will this affect traditional SBA loan applications in process or being submitted recently?
It's still going through, you know, your actual lender. So the only difference of business as usual is the fact that many of our home office are working remotely. So sometimes connection issues and different things are making it take a little bit longer. And I know a lot of lenders have, like I said, seen a huge increase. We have a 2% increase in our volume right now compared to our business as usual. So it is going to delay the process a little bit, but still the same procedures, same application, same information is going to be needed. So the process hasn't changed.
Okay, I do want to say to everybody, we are going to share the video for this. I assume we'll just put the link on our CREA page. So once we get that figured out, this webinar is being recorded and we'll put the link up on our CREA page. A number of people have asked, and then you're free to link to that. I know someone from Sharab Walker said they'd like that into their resource page. Absolutely, go ahead. I'm going to ask one last question. So for companies that potentially have solutions, either digital or physical solutions for COVID issues, does any of you have any specific recommendations on grant opportunities or funding opportunities? And we'll add those to our page also.
Yeah, Ken, I'll provide. I think I just sent Nate a couple of links, and I'll send some more. The state is I'll kind of comment on that. The state is looking, you know, for example, they're looking for ventilators. So, you know, if someone has an FDA approved ventilator sitting in their garage that they can provide to the state, that's great. And there's an email you can send and say, yeah, we can provide this. And, you know, we have seen a couple of companies like making hand sanitizer, for example, you know, like distilleries even. And again, you know, you can directly email the state. And we have a business development team that is essentially fielding those inquiries and responding to them accordingly. I will say that, you know, I would say the inquiries kind of fall in two buckets. One bucket would be, I've got a product, it's FDA approved, or, you know, it's got all the regulatory approvals it's need. And then there's sort of, you know, hey, I could help, my business does this, but I could help doing this. Maybe I need some money, maybe I don't. Those are kind of two different things. And so
I know one last thing. I want to remind everybody, the Tompkins Chamber webinar is starting at 11 o'clock.
Anyhow, I'll provide the links.
Okay, Nate, I'm going to turn it over to you. Sorry, John, we want to get everyone off because there's this other one coming up.
Sounds good.
Well, wanted to thank all of our panelists and all the folks at CREA for helping us put this webinar together. And our contact information is listed, and we'll post this presentation. And if you have any questions, we're all here to be helpful and to be supportive of the entrepreneurship ecosystem, and look forward to seeing you in the near future. Thanks again for joining us, folks.
Thanks, everybody.
Thank you.